Hello traders, welcome to another daily analysis. Today is Wednesday, November 30th, the last day of November. Let's get into it. Today we have a few important data. First is the ADP non-farm employment from US, and it was actually a very positive number, better than expected and better than previous. We also had the GDP data coming out from Canada, was also positive than previous and expected, and also is a positive deviation. So both data are positive deviation. And the crude oil inventory was a draw, not as much as last time, but still better than expected. Now, of course, the biggest news today is the OPEC meeting, and they actually finally reached a deal, which is not a surprise, but actually I am surprised. But we'll have to see what's happening afterward. Now, the reason they reached a deal, of course, it's because the Saudi Arabia actually took a huge hit. So they have a certain quota that they want to reach, but the certain member have to reduce the oil altogether in order to reach that quota. And previously, the stumbling block is because the Iran does not want to cut. And actually, so Saudi Arabia actually willing to take the huge hit, so to cut the output most. So by doing that, actually Iran is able to produce more oil, actually slightly more than what they're producing right now. And Iraq also took a little bit cut. And now Russia has promised, saying that they are going to join the cut as well. Now, seems like good news, but personally, I'm still very skeptical about whether it's really going to be effective or not. Of course, they reach agreement today, but there's no binding contract per se. It really comes down to how are you going to enforce that agreement. Now, again, as I was saying that the whole reason that oil price dropped in the first place is really the supply and demand. And the whole reason is dropped because the global economy is just not growing fast enough. The oil is just not on demand. And China also has a slowdown their growing. So that's why basically the main reason the oil price dropped in the first place. Second is that oil producing country, the OPEC members, all rely heavily on oil. So oil is pretty much their biggest component in the economy, so they really have no other way to not producing oil. So when the supply and when the demand drop, and then they have no other way to not supply, then of course you have more supply than demand, and that's hence what happened to the oil price. Now they're trying to again, I keep mentioning, they're trying to artificially reach this agreement, which is really against the fundamental economic theory that you really cannot really artificially reduce the supply and demand. Of course, you can do it within a small scale or within a more centralized control. But in terms of OPEC, it's really just a member state. There's no centralized control. There's really no penalty for any member that decide not to follow it, not to mention for non-OPEC members such as Russian. That's really why I'm being skeptical about whether this thing is going to cause a long-term effect. And I'm not really the only one. There's a lot of economists, a lot of financial analysts all come out saying that they really doubt whether this is going to help the oil price at all. Right now, the prediction is that it might go up for the next few days, but then it's going to be volatile for sure. And the highest prediction that people give is really, generally speaking, is at $60 per barrel, which is $10 from what we are right now. But really, nobody knows what's going to happen in the future. But for me, it's just more in a logical, fundamental perspective. I really don't have too much hope in terms of the OPEC and in terms of how effective that is. Not to mention that Saudi Arabia actually took the heat for Iran, which historically and even culturally, these two countries are rivalry with each other, and they still have this Yemen civil war going on. So, you know how far the Saudi Arabia is willing to do it for their enemy is really beyond prediction. Like nobody knows. how far are they going to do it? And again, not to mention although Russia joined, but you also have two other oil producers, U.S. and Canada. Of course, U.S. and Canada, mostly oil only supply for their own domestic demand. But just to let you know that right now, oil is not that precious anymore like in 1970. So it's really, anybody can produce oil because of the technology. So really, all this thing, how effective it is going to be, really, I have a big question mark in that. But of course, as a trader, we don't want to predict the future. We just go with the flow, basically. So as if for now, yes, it's going to be very good sentiment for Canadian dollar. It's going to be good sentiment for all the high yield currency. The oil goes up, the financial market all goes up. So if you look at the most surprising one is actually British pound. British pound actually benefit most from this OPEC. And a lot of low yield currency, particularly Japanese yen, Swiss franc, of course, suffer in this kind of recent sentiment. And Canadian dollar, of course, also benefit from OPEC deal, but also the data itself was actually not bad today from the GDP. US dollar generally supposed to get pressured, but because the US is just so strong fundamentally, and the data today, the ADP non-farm employment actually prove it. So all the data and the PPI data today all prove that US is actually very strong fundamentally and sentimentally. So really, although they did have a little bit pressure from the oil price, but it's not going to be a long run. US is still the rising star and really all the way until 2017. Now, of course, another currencies to be benefit is the commodity pair, particularly New Zealand dollar also benefit by the oil market and the high yield. Australian dollar usually will be benefit, but it has suffered largely drop due to the commodity price. And as I keep mentioning, if you want to trade Australian dollar, you really have to take a look at the commodity market, to what happened to the futures market and commodity market. And that's pretty much what's happening right now. So we are still largely driven, mix of fundamental and sentiment. And really, in terms of what currency are strong, really nothing changed much. The rising star is still the US dollar. New Zealand dollar and Australian dollar are still good buy. Australian dollar suffer temporarily from these commodity speculations, but it's not going to be a long run. And Canadian dollar is quite neutral. I don't know whether it's going to go in the long run, but in the short run, as long as the oil keep going up, it's going to support Canadian dollar. British pound actually looking quite bullish. And the reason is not because they are particularly good. The reason just because back then, after the Brexit exit, there was just too much short selling into the British pound. Too much, basically, you can say too much panic into the British pound. So still a lot of short selling power. So right now, you can say that the surging or the buying power into the British pound was actually just a short covering. So it's not that people suddenly find it's become attractive. It's just people suddenly find it's actually not that unattractive. So basically, that's the correlation is happening. So it's not because they have a long-term perspective. It's just purely because people thinking, hey, it's actually not that negative as a country or as a currency. Of course, British pound is still heavily, the future is still heavily controlled on how are they going to negotiate with the euro for the Brexit. That's really the main part. But of course, follow through the British pound, you have to follow through the news, particularly the financial market, particularly the service industry. So if they reach any sort of agreement on these two sectors, then the future is going to be quite good, at least not that bad for Britain. But so these two are very important sectors: service sector, and the financial industry. Now, an interesting news is that we call a British pound and US dollar cable is because the transatlantic cable, which a fiber cable that actually for the internet use. Now, saying today, I read the news that the cable is actually the key to keep London as a currency trading capital. It's because although a lot of company maybe decide to move their their sales department outside London if they do not get a single market passport, but because of this transatlantic cable, they still have to leave their internet there. So a lot of internet service is, especially for currency trading, still has to be in London, just for the sake of technology, because that for London and New York, number one, number two largest currency trading city, and because of this transatlantic cable, the actual cable underneath the Atlantic Ocean. So because of that, they really don't have other way but to leave the currency trading in London and New York. Otherwise, they have to rebuild this kind of technology, which is going to be very, very costly. So it just, sort of like a, bright news into this thing. So it's really depending on how they're going to negotiate. But again, as long as they can keep financial capital in London, and if they can keep the expat status, if they can still have this great service industry, then Britain is still okay. So nevertheless, right now, the market, the traders seems to be buying into the British pound. And again, this buying is actually just a recovery for the past pessimistic view into a British pound. So that's pretty much what we are right now, in terms of fundamental and technical. So I would say that personally, I'm still buying US dollar whenever there's a dip, whenever I have a chance. I'm still want to buy New Zealand dollar and particularly Australian dollar, since it's going sort of a negative sentiment right now. This three is still a rising star. Cable, British pound, you can buy it, but I will probably do it in the intraday perspective, just because, if you're looking at daily chart, it's probably still in a stagnant, it's probably still like a range bound. Japanese yen, Swiss franc, still the weakest currency, and euro actually is very weak for me. But again, month's end inflow has helped it, support it a bit. But it's finished. The November is past. It's done. So we really, the next following up will be this Sunday's Italian referendum, next week's ECB bond buying extension, and then these two is gonna have to decide what are the future for the euro in the near term. So if all things are equal, US dollar, New Zealand dollar, Australian dollar is still a very good buy. Japanese yen, Swiss franc, and euro dollar is still a sell for me. Canadian dollar is sort of neutral to bullish. British pound is neutral to bullish, but they both are not good enough for long-term perspective. It's just for intraday trading. Tomorrow we should have, let me take a look at what's happening tomorrow. So tomorrow, Thursday, we have, right now it's 5:41 p.m., right? So we actually have Australian private capital expenditure. It's not as important as actually manufactured PMI from China. So take a look at manufactured PMI from China. It's going to be more important in terms of Australian data or in terms of New Zealand data. Private capital expenditure, of course, is important for Australia, but it's not a tradable event. I don't trade the Asian session at all. But it's just later on 11 session, take a look at it and see what's happening. Tomorrow you don't really have any data at the tier 1 data at London session. Manufactured PMI is not that important for Britain. Like I say, you have to. The most important data is the service PMI for British pound. And then unemployment claim, this is really not important as well. It's just it comes out every week. And then ISM manufacturer. So tomorrow is not really a data-driven day again. Then of course trader is gonna be wait for Friday's non-farm payroll. This is the biggest data that's coming out. But again, whether it's gonna cause volatility or not, highly unlikely. Just because right now it's really, unless you have a very dramatic negative number coming out. Otherwise, if we have anything that's in line, then pretty much US is going to be still very well supported. Canadian dollar, of course, is tradable. You do have a good GDP today. So if Friday you have another good employment data, that's the second component of the microeconomy. The third one is inflation. So if you already have a good GDP, if you have a good employment, then if you have a good oil market, that's all going to be very good for Canadian dollar. Whether I'm going to trade it at a risk event, yes, but only if we have a surprise, and only if we have a surprise in the upside. So even if we have a surprise in the downside, even if we have a very negative number, it's really not going to change the outcome for the US dollar at this point. You're already at December 2nd, and the next week will be, weeks to come will be the Federal Reserve will be the rate decision. That's going to be important. Bank of Canada have rate decision next week. Also, of course, expected to be the same. So and then of course the ECB bond buying program, ECB press conference. That's really the most important thing happening in December. So and then the FOMC meeting is coming up the second week of December. So we'll see what happened next few weeks. But as for now, as for this week, tomorrow, Thursday, really not a tradable day, no tier 1 data. Friday, non-farm payroll, take a look at that. You can trade it, but trade to the upside down. Trade to the upside. But again, how far it's going to go in this kind of events, really, it's not going to create that much volatility. Basically, you have to understand, if you're trading intraday trade, what you want is momentum. And momentum happen only when people decide to buy and sell. And people decide to buy and sell most often when there is a surprise. And if you don't have a surprise, then it's better for you to buy at low, so you have more room to go, or sell at high. So today I actually, again, just trade intraday trade. Again, pending order at Japanese yen. I didn't get filled, unfortunately, and anything, just took off without me. But if any of you got in, congratulations. As I mentioned, I don't really have the best technical strategy in terms of this. But if you just, follow just simple hourly chart, buy at engulfing, you can pretty much make a really good money. I actually got in at dollar Swiss franc, so at least got in a winning trade. I'm still holding it, no reason to get out. I'm just gonna hold it. I'm also getting a short euro dollar trade right here. And I also have one losing trade, actually, dollar CAD. I actually long dollar CAD, because I was hoping that the OPEC meeting is not going to be a deal. I suffered drawdown, and then we actually reached the bottom for the day, and another dollar strength coming in. So I just got out, basically, when I had just a little bit drawdown, because I don't know how strong that's gonna go. And apparently it actually quite strong. It actually went up way past my entry. If I hold it a little bit longer, I could have not only get out at break even, but I could get out at a little bit profit. But the thing is that I don't want to against this kind of strong sentiment oil market right now. So not a big deal, small loss, and that's it. So $2 US trade I'm still holding, and decide to hold it. It's all break even already. I'm just gonna keep holding it. And today, in terms of London station, my strategy is still the same. Just gonna buy US dollar versus Japanese yen, Swiss franc, and euro. I'm going to buy New Zealand dollar versus Swiss franc versus Japanese yen, and versus euro dollar. I'm pretty much going to stay away from the Canadian dollar, just because I don't have enough. I don't know where the oil market is gonna go in the next few days. I'm going to stay out of British pound, but maybe perhaps if after the Asian session things are still going well, I might go into British pound, Japanese yen, since things looking very good. So in terms of Australian dollar, it's really depending on what's happening later on in the private capital expenditure and manufactured PMI from China and non-manufacturing PMI. So it's depending on the data, and depending on the sentiment, and depending on the price action. Otherwise, if you take a look at Australian dollar, it's really not too good compared to his neighbor New Zealand dollar. If you take a look at Aussie Swiss, actually it's a drop, right? And then if you take a look at Euro Aussie, it's actually another drop for Australian dollar. So the commodity effect is still very strong for Australian dollar, and as a trader, I definitely don't want to go against that. It doesn't matter how strong the fundamental is. You gotta understand, we are not trading with one element, right? It's not. You're not doing this as a economic study. Understand that it's very important and very benefit for you, but you don't want to trade blindly. Of course, you still want to see how are the player, how are the actual traders playing around in this market, in this game, and you don't want to go against that. So for me, even though I do bullish in Australian dollar, but I don't want to buy it unless other people or unless the more momentum going into it. So that's pretty much my game plan for tomorrow, unless anything change. Otherwise, it's just really pretty much the same. So let's take a look at daily chart. So Euro Pound first. Again, no surprise. We are still largely in this kind of we're just really in these two zones. Really, nothing has changed. You're really, if you're looking back, you're really up in these two areas, these two lines. So expecting to go up and down, it's probably 300 pips. Yeah, around 300 pips. That's, you are in this basically 300 pips zone, right? You did break out a little bit previously in October, but it's very rarely, and like this breakout was actually due to flash trading. So it's nothing to do with what's happening. It's just a flash trader, or might be a fat finger. We never know. I don't know if the report or investigation has came out already, but we don't know if it's fat finger or if it's just flash trading. But right now, it's just we are really into this range area. Euro Swiss have a very strong kangaroo tail, inverted hammer day. Now, whether it's good enough for you to sell, no, because these two currencies are equally weak. Right, so I don't, and they are equally weak fundamentally and sentimentally. So I don't really find a reason to sell into Euro Swiss franc. That's the first thing. Second thing is that I don't want to buy Swiss franc, especially when I know their central banks are always ready to intervene. So I don't want to buy into Swiss franc. That's the second reason. So these two reasons alone, let me decide to stay out of it. But of course, if you trade technically only, then yeah, you can sell it. I mean, it looks very attractive. It goes up to penetrate this new space. But just for me, it's not a good pair at all for me to do anything about it. Euro dollar, we are still in this kind of range area. Again, you are between 1.07 basically and 1.05. So again, you are really just like this 200 pips range zone. So nothing for me to take in terms of daily. I do actually short it in intraday trade, but in daily, it's just not that attractive for me. Euro Aussie is actually good for me to looking for a short opportunity, but I don't have it yet. So we'll see if it reach to 1.45 and give me like a kangaroo tail, inverted hammer, or even a big shadow, bearish engulfing. That would be a very good signal to short. But as for now, we just have to wait for daily. And that's the nature of daily trade. You really just, a lot of times, you're just waiting for the opportunity. And for me, that's really suits my personality in terms of this. Because I know that for me, the daily trade is really centered on the idea of being very selective. So, I forgot who said it before, but they say that trading is really waiting for the market to provide this opportunity to you. So really, trading is like you're walking on the street, you just have fun, walk slowly in your own pace and waiting for somebody to drop their money, right? So you're walking by the street, and if you see somebody drop the money, you just go ahead and very leisurely pick that money up, put in your pocket. That's really the mentality and philosophy of trading for me, really. So I don't want to force the market. I go into the market, especially in this kind of long-term time frame, I go into the market really very leisurely, looking for that opportunity to show up, to present itself. And the rest of the time, I'm just not trade in this kind of longer time frame. Now, a lot of you are impatient, me included. I'm the most impatient person perhaps that I know. So that's why I still do intraday trade. I still do risk event trade. They are not the bread and butter trade for me, but it's really just to work on my own psychological effect that I know because of the intraday trade that I am able to hold on to my daily trade. So that's why I'm doing intraday trade. Euro New Zealand, again, another Oh, actually, it's not a down day. It's actually a reversal day for euro dollar. So of course, I'm not going to buy against. I'm not going to short New Zealand dollar basically. So again, all these are looking very attractive price action wise, but it's just not good for me fundamentally and sentimentally. So I don't want to go ahead with that. Euro yen. Another update for euro yen. No surprise because Japanese yen is just very, very weak at this moment. Pound Swiss, another update. Cable is actually a good update as well. But of course, as mentioned, we are still in this kind of, we're still in this triangle basically. But it does look like gonna break out somewhere, right? Because it's getting narrower and narrower. So you just have a little bit patient, wait for that breakout to present itself. Pound Aussie, it's another huge update, and you are actually right at this resistance right now. So just be careful if you are a technical trader, decide to short it. Just be careful. Now, if I'm going to short or not really, because again, the sentiment for Australian dollar is very negative right now. I don't have any signal. That's the second reason. But if I do, then it might be a good trade to take, especially in the longer time frame. Pound CAD, again, range area for me. You're still in this triangle, triangle area. But it's just amazing to see that British pound actually gaining so much strength, versus Canadian dollar, even at this today's OPEC meeting. Pound New Zealand, again, another update for British pound. And pound yen. Pound yen keep going up, but you are actually right below this 200-day EMA. So for me, I'm just looking forward to do an intraday buying into British pound, Japanese yen. Swiss franc and Japanese yen, another update. So really just to show you how weak Japanese yen is. Dollar Swiss continue to edge higher, but basically it's again another range bound area. Dollar CAD actually have this is again a strong signal for US dollar, because even though you reach this OPEC agreement, US dollar, and even though US dollar is denominated, even oil is denominated in US dollar, and oil market actually jumped almost 10% today, dollar still is stronger than Canadian dollar. It's actually a very good signal. I mean, I do like it. So I just don't know if it's a good hammer or a kangaroo tail. Let me see. By 3 minus 1.3464. 3428, 1.3437. Actually, it is a good kangaroo tail. So this is very attractive for me. I might actually take it. The only thing I don't like, I like it how it penetrates this lower area. I like it how it's a continuation trend up, and I like it. The candlestick itself is strong enough, and I also like the fact it's US dollar versus Canadian dollar. The only thing I don't like it is that the resistance is very close right here, 1.36, 1.3588. That's the only thing I don't like it. But if you zoom out, it's actually you still have a lot of room to go basically. So actually I like it a lot. I might enter it. I'm gonna write my trading plan later on, but just by looking at it right now, it actually looks quite attractive to get into this trade. Dollar yen, another huge update for US dollar. Again, you have to look at zoom out to know that wow, it's still have a lot of room to go. It's very steep, so a lot of people will argue that there must be a retracement, but not really, because you gotta understand why are people buying it. This is our big money. The big money is the hedge fund. The big money is the pension. They are really getting into it for the future, which is December rate decision in 2 weeks, and also for 2017. So if you're looking at it, you understand that it's no surprise this thing is going to keep going up for US dollar. So it's not that it's going too high, it must have a retracement. Yes, it will have some retracement, but it doesn't mean that it's going to drop to 110 or 107.50. That's just the way you have to look at things, both fundamentally and technically. Aussie Swiss, Another down day for Australian dollar, Aussie dollar, another down day for Australian dollar. No surprise. And now, whether I'm going to short it, not really, just because I really like Australian dollar and I also like US dollar. So again, this is the scenario of two strong currency. That's why I don't like to short this thing in a daily trade. I might short in the intraday trade, providing a good sentiment. Aussie CAD, another down day for Australian dollar. And again, not looking to short Australian dollar against Canadian dollar. Aussie New Zealand, another down day for Australian dollar. Now, as mentioned, we were here, we got in for long, and we got out, and now basically this is a triangle. If you look at it, this is a very big triangle. You really, again, in this kind of up and down consolidation area. Now, don't get me wrong. There, of course, an opportunity you can make money when it goes down. You can also make money when it goes up. You can sell here, buy here. And Aussie New Zealand, as I mentioned, a very good benefit is that they both are commodity pair. So they both have a very good hedging out each other in terms of the risk sentiment. And as for now, New Zealand dollar is stronger than Australian dollar in terms of the sentiment. So, but of course, you don't want to sell at low. So don't be surprised to see. But of course, these things change day by day. If tomorrow the commodity price picked up again, then you're going to see another strength into the Australian dollar. So as for now, I don't have anything. There's no signal. But it's just saying that this is a very sort of a safe currency pair to play with. Now, Aussie Yen, another update, and it's just again show you how weak Japanese yen is. Okay, Swiss franc, another update. Just look at that. You're supposed to see a very strong buying into Canadian dollar because of the oil market, but that's not the case. And even if you're looking at WTI itself, we tried to break out $50 per barrel, but actually failed to reach that. And it just shows you how much skepticals that we have are in this kind of OPEC meeting. How inconfident that people feel, and that's really a warning sign for the oil market in general. Yen, huge update for Canadian dollar versus Japanese yen. New Zealand Swiss franc is another bearish kangaroo tail, inverted hammer for New Zealand Swiss. But same story, I'm not going to short it. New Zealand dollar, it's actually a down day. Again, not going to short this too strong currency. New Zealand CAD, another down day. It's exactly same signal as a US dollar actually. A New Zealand yen, another update. As I mentioned yesterday or the day before, like if you are a breakout trader, it's actually a very good buy, and that's what you have right now. But of course, as you can look at, feel that the candlestick is getting smaller and smaller. But that doesn't mean it will drop. It might just have this kind of red signal, So this is where you gotta decide if you are in, whether a lot of people will get scared and quickly reduce the stop loss to break even. But if you do that, it's very highly likely you're going to get stop out at break even, right? So for me, it's not black and white. It's not like you want to get in and you want to reduce risk, so you immediately move to break even. No, sometimes you can tighten up, and if you tighten your stop loss, and sometimes you get stop out, you're still going to lose money. But in the long run, you actually learn how to reduce your risk, and by doing that, you actually increase your profit in the long run. And that's what I did today in my dollar CAD trade. I learned to actually just reduce my risk instead of getting to break even, or instead of just getting out. And same as my euro dollar trade, I'm at break even right now, but that's not the case at the beginning. I just slowly reduce my stop loss. So that's the right way to think, is that it's not a black and white thing. You don't want to get in, get out just because the market shift, things like that. You really have to learn how to actually tighten it up, how to actually add on to the position, how to really trade it dynamically with the market. Okay, guys, that's it. So really on my plate in terms of daily chart, I'm really looking at dollar CAD. I do like the signal. The risk is again, the resistance is very close. And if we get in today, it will be Thursday, and Friday will be non-farm payroll and Canadian dollar employment data. So those kind of events is going to affect dollar CAD. It might we might not have enough time basically to move to break even prior to those events. So depend on how you like it, whether you like to take this risk or not. I am going to do a further analysis later on. If you're interested in that, you can go to my website to see if I have decided to get in or not. Other than that, I don't have anything now. If you want to trade intraday trades, still US dollar, New Zealand dollar, and Australian dollar are very good currency to buy. But watch out for a commodity bearish sentiment right now for Australian dollar. Also watch out for any pullback into a risk sentiment. So basically, that's it, guys. I will see you tomorrow, and because tomorrow it doesn't have any much data, so most likely it will be a sentiment-driven, news-driven day. And then Friday, of course, non-farm payroll. That's how we're gonna end the week and start a December month. Quite excited. Okay, alright guys, thank you very much for watching. If you have any questions, feel free to comment below. Otherwise, I'll see you tomorrow with another daily analysis. Thanks guys, bye bye.